Hold on 1 second. It'll usually take a second to load up.
All right. How many people register for it? Do you have an idea?
Hundreds.
Jesus.
400.
Thanks for putting me on the spot like that.
Hey, good evening, everybody. Let me know if the audio video is coming in okay. How's everybody doing? Hey, Graham, how you doing? Roger, how you doing? Daryl Buchanan, my man. As always, I know there can't be a webinar without you being in here. Hope all is well. Just type in the box. Usually with Google Hangouts, there's about a 10-second delay. So just let me know that all the audio is good. And we've got an amazing webinar set for you guys. Good. Jay Shah, how you doing? So folks, welcome. It's been about a month or two since we've done our last path to profitability. And I'm really, really excited about this one because I have a very personal relationship with Oscar, and I've gotten to see him grow as a trader. And then also we've just become really good friends from having at first a student-teacher relationship and then just a friendship. And he's grown leaps and bounds as a trader. And he's got a great story. You know, we've had a lot of people come in like these, you know, hot shots come in like Mary Beth and stuff that come out of college. And it's time we get a real adult doing one of these things. Oscar is like my hero. Like what I admire him. He's really one of my idols because he's like Danny Tanner in Full House. You know, Oscar, on top of being a full-time trader, and you know this is his job. You know, he's got soon to be 4 little girls, all under the age of 10, running around that house. And so, you know, he's an amazing dad, and I've learned a lot from him over the years on just patience. And he's Brazilian, so he's just really a loving guy, and he's an excellent trader. You know, in our chat room, I get so busy because we're managing, you know, so many different businesses and stuff like that, and I'm trading. And Oscar over the last couple of years has really helped me out with managing and moderating the chat room, and really helping a lot of our new traders with their questions, along with posting his trades. You know, he's in there every day posting his trades. He's telling people what he's looking at. And most importantly, like, you know, he'll be always scanning the chat room. And when people are saying, I'm doing this or that, you know, he's always really quick with feedback saying, hey, that's probably not a good time to do this, or it's not a good time to do that. And you just can't beat that. And that's kind of what I really like about our community is, you know, I'm a good trader, and that's awesome. But to have like a really successful group where people are growing, you need more than a one-man show. You know, you need a team of people. And so with Mary Beth and Oscar and so many of our students growing and doing this for a job and sitting in our chat room, able to guide our students, that's really how you can, you know, really start learning, because it takes a village, you know, to build a trader sometimes. And that's what we have. And so Oscar took our boot camp probably about a year ago. He's been trading for years even before that. So he's got so much knowledge about trading, and it's been a pleasure. But Oscar, welcome. Why don't you give us a little rundown on your background, how you got into trading, how we even met. I know you came into the chat room. I probably give you a free pass because I saw you on Twitter, and you were making some good trades. And I remember you coming in the chat room, and then, you know, we just started, you know, sparking up a friendship.
Well, first I want to thank you for inviting me to do the webinar. I'm really excited. I'm sure that this is going to be very informative to a lot of people who can relate to me, at least, especially like at the age, you know, like I'm 40. You know, I've been trading since full time. I've been trading since 2007. Before that, in 2003, when I got married, I was still living in Belgium. And I got as a gift, like my wedding gift, was my parents gave me $5,000, and I had like my father-in-law who was already like involved in the stock market. You know, he was, and that's how I started. You know, I told him like, hey, listen, I have $5,000. Let's split this into four, and then I wanna invest, because at that time I didn't know trade. I was just like investing. So let's invest in this, and that company, you know, and let's see how this is gonna go. And then after 1 year, I was able to. That was like, it was right after the 2000 bubble bursted, but like there was still like a lot of stuff that was still working on. So what I did is like I was able to double the money the first and the second year, just on investing like that, because everything was working out. As soon as I noticed that things were working, I started to get like more and more involved. I started like to get like other people, you know, like involved in investing and everything. And then in 2006, my wife, who works for a pharmaceutical company, she was transferred over here to the US. And that's when I said, okay, now I'm gonna do this like as a full-time job. And that's when I started like in 2007, which was actually the worst year to start something, you know. Like I started, okay, I'm gonna start trading my own account. I started with 30. I'm like, at that time I was trading with around like $35,000, and just had like a brokerage account and start trading. Did well in the beginning. Then in 2008, when the bubble burst, the bubble burst,
big crash.
Yeah, that crash. That's when everything is like going spiral. And then I remember like was always here, like when Syed, this man, he was explaining about his time. You know, I relate to that, you know, because he said like that's when like everything like stopped working, but like I was still like on that investing kind of mentality. So like I was like, okay, I'm gonna buy this dip, and then like that dip will never like finish, you know. And yeah, I did lost a good amount of money. But then I had like my kids, like my first kid had come, so I was focusing a lot on her, and I was still doing like a lot of like paper trading, because at least like this, because that's what I do. Like when I cannot trade, I at least paper trade. So like that, it keeps me on the edge all the time. It keeps me like interested. It keeps me going. It keeps me watching the patterns, learning like understanding the setups. You know, so like that I can keep on doing this stuff. And then in 2009, that's when I joined my first chat room with Stewie, and that's where I met Syed. You know, and that guy, he was just like my idol. You know, like I was watching that guy hitting like stock after stock after stock, and like these breakouts, and I could not understand nothing. So from 2009 to 2010, I was there learning from them, from Stewie and from Syed. And one day, like I show up, like I think in 2010, and Syed was not there anymore. And then they stole him. I know that. Stole him. And then what did I do? I joined the bulls of Wall Street. And man, when I joined the thing, everything went like absolutely like crazy. Like everything was turned like upside down. Like these guys hitting like $2.50 stocks, you know, like $3 stock, $5 stock, and those things were like exploding. And I said, "Oh my God, what the hell is going on in here?" And at first, and I already told you that. I told you that like in front of you. I said, "Man, this guy is running a scam over here. It's impossible. This thing cannot be working." And then after a while, I started understanding. What did I do? I started to focus again like on my trades, and focusing like more on the technical part. I wasn't trying to do your trades or Syed's trades. I was focusing on what I could do with the information that I was getting from you guys. And everything started to work a little bit better. And then in 2012, everything started to go a little bit better. 2013, that's when I was invited by another chat room to be the moderator in that chat room. And then I called you. I said, Kunal, I had this guy who invited me to work with him, but I cannot stay away from the bulls on Wall Street. And then you said, Oscar, the more the merrier. You can stay on my chat room, you can watch my stuff, and go do it, and I wish you luck. So in 2013, a month before I accepted that, that's when I took the boot camp, and that was just before like my third daughter was born. And I'll tell you guys something, and this is I'm not pumping up or anything. This is just pure reality from the experience that I had investing. And when I took the boot camp, like after the, honest to God, I think after the 8th class, when he started to tell us how do you scan, how do you find those stocks, that I remember that week, I went from having, like, for example, like my daily gain trading was about like between like $150 and $400 a day. That week, I was able to do on one day, I did 2,578. I could not believe myself. And that's when I said, boom, this is it. This is what I have to focus on. And that was pretty much like it, you know, like, and everything like started to grow like much faster, you know, like I remember like the way that you were showing like how you scan, and I remember you were doing like plop, 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 like really fast, and I said, oh my God, like I cannot even tell what's going on, what the pattern, what's the setup. And then today I do exactly like you. You know, I pull up the scanner, repetition, and I just go, yeah, poof, 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 and it just becomes so fast, you know. But you have to know.
One of the keys, guys, about like how I like to teach trades. So people always ask me like, oh, why does it move this way, or why does it move that way? And I know all these reasons, but I always tell them at the beginning, I say, don't worry about it. And they say, why? I say, well, let's first learn the patterns. Learning a pattern is like stereotyping a stock. And so in trading, there are literally dozens of variables that you have to compute at any given moment to get into a trade. So you're analyzing what's happening with the market, you're analyzing with what's happening with the stocks and all of this stuff. And so what ends up happening is you get this paralysis by analysis, where everything just becomes a jumble and you freeze because you've learned a lot, but you're also trying to compute a lot of different information. And so in the beginning, I tell these guys, just focus in on patterns and then teach your eyes, train your eyes to see them really quickly by repetitions. And so when I tell my guys to do the scans, I tell them to go really quick, and I go really quick because I want them to just see pattern, see pattern, see pattern, see pattern, see pattern, to simplify the process so that they don't overthink everything, because that overthinking and that paralysis by analysis is what causes a lot of trading mistakes for the newer trader. And so that's where they screw up. They think too much, they know too much. And so I dumb it down into this, and then I tell them not even to look at it for a second. It's just tap, 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 like as you're going through your scans, so that you can just focus in on the pattern. And once you start learning that and training your eyes to see it, then it becomes a lot easier to start adding in additional pieces to the foundation of your trading and starting to overlay more complexity and market knowledge and things like that. But what you'll see is that in the beginning, when you can simplify it, you can make a little bit of money still. Like I had Mary Beth Oscar on the, I do Ticker TV at noon some days, and she was talking to the guys there, and she goes, you know, today I've only traded 2 different patterns. She goes, I trade these gapper patterns on the flags on them, and she goes, and in the morning I take the setups that I like, the momentum stocks, and I just play red to greens. And she goes, and that's really all I do, because she's got so much stuff going on. You know, she's running a business, she's running her hedge fund. I mean, she's a developing, you know, young married woman, entrepreneur, you know, and she runs the business for me. She got so much stuff going on. Imagine trying to just trade like 1,000 different things. It doesn't work. And she was really good at that when she was new too, is that she just focused in on a couple patterns, and then it was just about nailing it. And so that becomes really, important. So, when I was teaching you too, like how to scan, I just go so fast. I'm always hitting the space bar for a very specific reason that I don't want anybody to think. In trading, thinking is no good.
Exactly.
It's about anticipating and then reacting.
Yeah, that's the thing. Like in what you said about Mary Beth right now, I know like I only focus on two patterns today, and that's exactly what I do. I'll give you guys a round of what my day is like. I wake up like around 7:30 with whichever like one of my daughters come in. My wife and I, we get them ready. At 8:30, I leave the house, drop one near my house, and I drop the other two on the and I drop the other one on closer to my wife's work, and then I come back home with the youngest one. I still don't turn on my 9:30. I still did not turn on my computer. 10 o'clock, nothing. When I actually put her to bed, like around 12:30, 12:45. That's when I first turn on my computer and I show up in the chat room. And immediately when I sit down, I already have like my predetermined like scanners, and then I just start like finding these setups. So what I'm trying to say is that like you don't have to wake up like 9:30 and like be there like in the chat room, because the chances of you being able to replicate what Kunal does, what Syed does, what Maribeth does, it's very hard. So the best thing is for you to sit back, breathe, and go through your scanner, even like mute. So like that you don't hear, first of all, you don't hear Kunal singing, which is horrible. Everybody knows that.
I sing all day.
And the second thing, you don't hear him like shooting. Okay, let's look at this. I'm hitting like 2,000 shares, whatever, and then you see like those numbers that Kunal is able to play. Like, oh, I'm buying like 4,000 shares of a $2 stock, a $3 stock, and trust me, if you're not ready, you're gonna listen to those numbers. You're gonna get frustrated and say, oh my God, maybe I should just like hit my buy button like with him. It doesn't matter if I'm chasing or not. Don't do that. You have to play your ideas. You have a plan. He has a plan that works for him with the amount of money but you have to play another plan for yourself. Everybody's very, very different. So what I want to say is like, as soon as I find I pull up my scanner, I look at all the names individually. I pull them on the screen like really fast, and then when I see a pattern, and when I'm saying like a pattern, I have like maybe like 3 patterns that I do well, just like Maribeth. I have the flat top setup, I have the 1, 2, 3 setup, and the flag breakout. That's all that I know, because that's all that I can do right now while taking care of my little girl. My little girl, like when she goes to sleep, like around like 12:45, she wakes up like around the 2:35, quarter to 3. At 3 o'clock, so I have to trade at that time. I have like maybe two hours to trade. At 3:15, I have to get out of my house and pick up my first daughter, and then pick up the other one. So like I don't even see the end of the day of a trader's day. So
let me ask you something. Before Maya was born, my little Maya, you were pretty much trading all day because you had the 2 kids off at school.
Yes.
And you had a lot more free time.
Yeah.
So you were trading all day. So now you have to really focus, because obviously you can't just dilly-daddle all day, getting ready, have your coffee, watch the chat room, and try to, find your 1 or 2 good trades for the day. You've got to do it a lot quicker. So when you turn on your computer, like, give me an idea of what type of things you're filtering for. Like, what are you scanning for during the day? What do you use as a scanner? What program or?
That's the thing. That's what everybody's gonna like. Kunal, he pays for his TC2000. He has his own proprietary scanner from Trade Ideas. What do I use? Because like, since I cannot spend that much time, I'm not gonna pay for that stuff. So
yeah, no reason to.
I use the free version of free stocks of TC2000, which is freestockcharts.com. That's what I use. That's what I have like for charting. Okay. And my scanner is the FinVis, the free scanner.
Right.
Yeah. And then over there I have a scanner that Syed has showed me, you know, and I'll be able already shared this with a lot of people, you know, and I'll be happy to share it again if you guys want. And then I have like my own scanners where I look for stocks that let me see if I can pull it up over here, just for me to refresh my memory to see. Like I look for stocks that are over 300,000 in volume. It's up 4%, and oh, something that is very important. That are very close to oh my God, what I want to say, I just forgot now. Jesus Christ. Oh my God.
So you had stocks over 300,000,
Yeah,
4% volume, and any other.
Oh yeah, and they have like and when I see it when I see it on my charts, can I share my screen over here?
Yeah. So if you go on the screen, on the left side there will be first a chat box, and then the second green square button is called screen share.
All right. Can you guys see?
Oh yeah.
All right. That's what's very important. Like when I have my charts, this is what I have. Very, very simple. So over here I have the price, the net change, blah 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 blah, and then over here the volume, and then the volume buzz. So like that, with the volume buzz, you can actually tell where the money is going for. It's going to on a certain day, you know. So that's
sure.
And then this is like a very squished like version, because I have 4 screens running at the same time. So I try to put like everything on the 4 screens, but I have this is a little bit squished. So, and this is what I do, you know. I just keep on looking at the charts, try to find. Let me see if I can something over here that I did well. Something like Kang, which you like. It's not like something that Kunal would trade, you know. It's just like stock that lost a lot of you know, a lot of like shares today. But it's something that I found a simple setup on it, you know. Like I looked at like over here on the 5-minute chart. The thing that brought me like to the stock is like over here on the 5-minute chart. It did what I personally call what I call like a kind of a 1, 2, 3 setup. So it dropped all the way down, had a double bottom over here. Then it started picking up 1. It picked up a little bit more, then it stalled 2, and then the thing just goes. And what I'm expecting for the stock tomorrow, if it can hold these levels over here, it's to maybe go up to 1774, which is the moving average, the 50 moving average on a 15-minute chart. So I look a lot of like when I trade during the day, I bring up the charts, but I have to focus on stuff that work really fast. So I look at the daily chart, but I also focus a lot on the 15-minute chart and also on the 5-minute chart. So like on this example over here, like WETF, which is another stock that bounced off. I alerted people over here around 2130. I took it at 2130. I sold it. I sold the first one over here around 2169. No, 2169 was the second time. I sold the first one at 2150 something. I don't remember. I think it was 2151, and then it just kept going on. And I said, and what I told people was the following: like when he, like over here on the 15-minute chart, when he hits the 20-day move, the 20 MA on a 15-minute chart, this thing is going to pull back. So what I did is like, as soon as it hit over here, the 2176, I already had unloaded the rest. But as soon as it touched the 2156, I shorted with a 2190 stop. And what happened is like it dropped right after. I sold over here like around like 2165. It's like it's a silly trade, you know. It's like it has to be like very, very fast, you know, because otherwise you don't make money when you don't have like so little time for you to.
So Oscar, can you walk us through? So you've got three windows on your chart. If you can go back to your chart. So walk us through like why you have the daily, the 15-minute, and the 5. And then if you can kind of fill us in on these different indicators and what they do, so we can get an idea of how you set up your charts and what you're digging into on these setups.
Well, I have the.
You got to go back to your screen share. It popped off for a second.
Popped off? Okay, I'm sorry. Where is it? Screen share. Sorry, screen share. Free stock charts. Start. Can you guys see it now?
It'll take a second. Hold on. No, we just got a little black screen.
Black screen. Let me stop sharing and start again. Hang on. Stop.
There we go.
All right.
So walk us through. So you have this daily chart, the 15-minute, 5-minute. So why do you have these three things? A lot of people probably don't know about aligning on time frames and things of that nature.
The reason that I have the daily chart with all this information over here is, for example, like if we have like a stock that suddenly drops. Let me see, like see if I can find one over here. If you have like a stock, like let me see if I find it. Oh, like over here, like Kang, you know, that I looked up. This is something that I looked up today. So what Kang did today, it was all the way up there, dropped, went right through the 200 MA, the yellow line. Okay, and then it kind of bounced off the 50 MA, you know, around like 1697. It went all the way down to 1690. So I knew, okay, there's something that I actually learned like from in the boot camp, and a lot from Syed, you know. So like when you have like a stock that drops that much, but gets close to the 50 MA or the 100 MA on a daily chart, there's a good chance that it's gonna bounce. So you're kind of like catching a knife, you know, which is something that I usually do pretty well, I could say, you know, like I do this stuff very, very well. So once I see that it bounces off the 50 MA, I just keep waiting. I don't jump right in. I don't jump in like right away, you know, because what I try to do, like, it bounces off the 50 day moving average over here, and then when I go like to a 15-minute chart, which brings me like closer to my timing, you know, I see that it's almost bouncing off that it also bounced off the 200 MA. Okay, and when I start seeing like the pattern starting to go on, when I mean like the pattern means like on a 5-minute chart, it starts to try to cross the 90 MA and the 20 MA, and then it kind of like stays like flowing around it, but without like losing too much. You see over here, like it's holding like around like the 17 level, and then after this, I just wait for the right time to jump in. So this is like on my view, this is how it works. Like you have like a
sure
one.
What does this tricks thing do? What is the tricks?
I have no
idea. Check in money flow.
I have no idea how the tricks really work. What I use a lot is the.
So what do you use it for?
Syed said for me to put it over here, and then like one day he was gonna explain this a little bit better. But something that I use a lot is this checking money flow over here. So I know that like when that's the way that I interpret it. That's the way that it works for me. When it's like all red, there's no way that the breakout can happen. So this is what I was explaining. So you have over here like this. This is like the first try for a breakout, second try. And then over here, the third one, you see like the green bar starts to flow up, and that's when you have like some kind of like a good movement on the stock, you know. So I did not take this stock, but I would have taken like about over here, 17, 18. I would have taken off as soon as it touched 1740. Why 1740? Because you have the VWAP over here, and you have to respect these levels too. You know, so whenever you have like a stock that is moving up, it doesn't really mean that it's going to break out. You know, yeah, it's going to find some obstacles during the way. So I personally like would have taken over here like at around like 15, 17, 20, and sold it like 20 cents after for me to take some profits. And then what I'm expecting for it tomorrow is to hold this 20 MA over here and this 20 MA over here on the 15-minute chart, and see if I can make something out of it. Unless something else shows up tomorrow morning and then looks better than this. But that's the way that I have to work. I don't have a lot of time, so I have to be really precise on my trades. Keep like my
Sure.
my stops very, very tight, and do the best.
What other type of setups do you like to trade? So this I get this is a bounce play. You mentioned that you like to do flags, and then you had one other setup that you really liked.
What was the one today? Let me pull up over here my CLNE. Can you guys still see my screen?
Yep.
Okay, CLNE. See, that's something that I like a lot. This is a kind of setup that I like a lot. So you see over here, I don't even have to I don't even have to look too much on the daily on this one. You know, everything is happening pretty much on the 15-minute and a 5-minute chart. So today I saw this stock like from my scanner, and what it did is it started to run over here like on the 5-minute chart. Okay, and this was like about the same time that in the chat room I said guys, if you see this stock starting to run and you feel like you missed it, just let it go. It's gonna have a pullback, and if the stock is really ready, it's gonna take you guys on that pullback. And that's exactly what happened to it. It started to run over here, then it pulled back, but you see it's holding over here. It's holding the VWAP. It's kind of like holding the 90 MA, which is very important when you're looking on a 5-minute chart. And then all you have to do is just time it. You look at the same stuff again. It's like 1, about over here 2, and then on the third one is like when you see that it's starting to go, that it's starting to hold, you just use like these lines as support, you know, and you just take it. So like you could take like a little bit before, like around like I would probably have taken it over here like around like 643, 640s, you know, and take some off over here like when he around like 663, you know. As soon as it starts to get to a spot that you can take some money off, just do it, you know. The idea let me just finish one thing. The idea with CLNE was like if it continued to, if it had like the strength to continue to break, that's when I started to look at the daily chart. And what I saw the daily chart here is that the 20 MA, the 200 MA was at 695. So this is what I said. If CLNE continues to run, and it looks like over here at the end of the day, it looks like it actually is flagging again. If it just continues to run, it can pop all the way to 695. It's gonna reach this 200 MA. It's gonna be like a 200 MA magnet. This is a kind of.
Oscar, do you like, so when you're trading these flags, do you like buying the setups when they're actually breaking out on confirmation, or do you anticipate them? You know, getting them.
I like to anticipate. I like to anticipate because like when I anticipate, what I use is the moving average on a 5-minute chart. So for example, like I said, like I gave the example with CLNE, if I was going to buy this, I was going to buy it as soon as it starts to cross the 90 MA, and I would put up my stop at around like 635, which is just under the VWAP, because I interpret like the VWAP as a good support. So as soon as I see it tapping like for the third time, I would probably take in like around like 640 and set my stop to around like 635. So I just have like 5 cents risk on it, and I have like a lot of like you know, potential gain on it. That's the way that I play.
Folks, so there's when you're trading, you know, there's a couple different ways to go about it. So let me see if I can pull up my chart. Hold on one second. Screen two. There we go.
That's the big dog stuff there.
So, folks, and Oscar, let me know if you can see my screen here.
I can see it.
All right, cool. So, folks, there is a difference between the reason that there's two different levels of thinking. You know, one, like when we're talking about trading, there are people that anticipate breakouts, and then there are people that buy on confirmation. And traditionally, you know, people always told you like, okay, buy on confirmation, meaning when a price actually breaks over a level of resistance. And that's usually not the best idea. And I'll tell you why, because you give up too much. And what I mean by that is, and what Oscar's talking about is like, you know, for example, say you're day trading and you have this chart WUBA. So this is what we call a flat top breakout, right? This is you know, something that Mary Beth was trading today. You got a triple tapper breakout. It's a flat top breakout. So one of the things that you'll notice is when we talk, there's two different levels of thinking. A breakout means that you're buying as price breaks above price resistance. So like say you had this morning flag. This is a flag pattern in the morning. Say you bought it on confirmation. So as it's breaking out the high of the day. Well, as you're doing that, you know, say you're buying the stock at $54. Okay.
Kunal, I don't think.
Oh.
They cannot see your screen, I guess.
Oh, hold on. There it goes. All right, we should be back.
No screen, no video.
Dun, 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 dun. Hold on.
I stopped sharing mine. I'm not sharing mine.
Yeah, I had it.
Okay.
I got like 18 people texting me like I don't know. Hold on. One second. Hey, Roger, I'm not an idiot. Relax. I may have done this once or twice before, Mr. Servant.
Hold your horses, guys. Come on.
Jesus. I know, Roger. I see him all the time. All right. Let's go back. All right. So when I worked with Dr. Mineker was a very well-known trading psychologist. We used to work with him. He used to do some of our webinars for the boot camps. As you know, the mental part of trading is just so important. And one of the things that me and Dr. Mineker used to talk about was he's like, he told me something that I thought was really funny. He told me, and he works with people from Goldman Sachs and prop firms and stuff like that. And he told me the best traders in the world, man, they never buy in confirmation. And so one day, like he was looking through my trades, and he said, "Why did you buy this at the high of day?" And I said, "Well, Dr. Mineker, you know that it's that was the breakout." And he said, "Canal, you know that that's not the breakout just because it's over high of day." And I'm like, "Yeah, I know." So he goes, "Why did you do it?" I go, "I had FOMO, fear of missing out, and so I chased it." And he goes, "Well, so do you ever buy on confirmation?" I go, "No, I guess not. Confirmation is for suckers."
Yep.
And so he made me actually write it down on a piece of paper and put it on my, put it on my screen. The confirmations for suckers. Never buy at high of day. And the reason for that is that there are people that buy in confirmation, and then there are people that anticipate. And so let me get back to it. Hold on. So the reason is this. So say like WUBA, this is the breakout, right? So you have a flag pattern here, stock gaps up and it goes sideways. So if you buy this at 54.20, okay, your risk, you have a little bit of risk here. you're going to end up having like $1 stop loss. But the main thing that happens is you're getting a stock as it's extended. So usually stocks, once they have stocks run in bursts, whether it's on daily charts or intraday charts. Remember this, guys. Stocks typically run in bursts of 3 to 5 days or 3 to 5 candles, depending on your time frame. Okay. So if you are buying the third green candle after it's already spiked up a couple dollars, you're already getting a little bit extended. Now, can it go further? Sure. But you're getting it with a lot more risk. And the thing is, if you have a really good pattern, why not get it early? If it's a high probability where there's an 80% or 90% chance it's going to go, why not buy it early where your risk is really small and you don't have to chase it? You can be in first, and then you have really a lot of control over the trade. See, when you buy high, you don't have as much control over the trade because the stock's going to go up and down. It's going to be a little bit more choppy as you're catching it as it's moving. So you're more prone to emotional mistakes and your risk is higher. But if you buy in anticipation, like for WUBA, if you were buying in anticipation, like where Mary Beth was buying this thing originally, this stock gapped up and then it pulled back. See how it like started to build support right here? It started to pull back. So where you're buying it, the real breakout is really, that's the breakout right there. That's where you want to be buying this. And so at this point, you're getting a stock at say $52.50, but you're getting it while it's coiled up. You're getting it while it's coiled up, where a stock, if you're getting it up here, you've already given up a couple dollars and it's going to get tired. Guys, remember, this is a tried and true thing about trading. Stocks get their power from consolidations and bases. Those resting periods give stocks the gas they need to make runs. And so when you buy a breakout on confirmation, yes, you have confirmation, but oftentimes by the time it gets to the breakout, a stock is already starting to get tired, and the real breakout happened much earlier. So it's really important to train your eyes to see the breakouts well before they happen, because if you have a high probability situation where something's probably going to break out, why would you not get it $2 earlier when your risk is much lower? And then what happens is this, like a lot of times people say, well, breakouts may fail. Sure. But the thing is, like, say this thing goes into high of day and it fails, you're already up $2. So it doesn't matter. You can still sell for profit. You're in control. Where if you buy high of day and the breakout fails, then you've taken a loss. And so there's a big difference there. And not to mention your risk will be just a handful of pennies on this, right? You're going to have a risk of like 50 cents. Yeah,
that's what we usually do, Kunal. Like that's what you taught, like in the boot camp. Like you go in early, like you look at the flag as soon as it starts to break out, and what you do, like as soon as it gets to the point where all the suckers are going to buy, that's when you sell some. You sell some, and if you run, you're just like playing with the house money, because you already made some money over there, and it just let it go.
Exactly. So anticipating these things are really, really huge. So this is a very, very simple pattern, but it will get you in the momentum plays that you need to be in, and you can trade these every day. So I've been using this pattern. For example, this is probably one of the first patterns I teach in class. I use this pattern every day for the last decade. It's just a tried and true pattern that holds true. But the key is to get it near the support and anticipate it, and then you have total control. Oscar, give me some principles. So I know you trade these flags, unless you have a couple examples of flags you want to go over. Give me some of the principles you use for like risk management. I think that's probably where a lot of people kind of goof off. I get a lot of my students, they do good, they're fine, and then they have one losing day, and then things start to unravel for them. you know, and then all of a sudden their losses get bigger and bigger, and the risk gets higher and higher. And usually what happens with newer traders is as they lose, they trade more and more size, trying to get all their money back in one trade, which never works.
And they blow up. Yeah, what I have is and I'll be happy to share. I'll be happy to share too if you guys want. Is I have a very simple spreadsheet that works as my trading calculator and also my trading diary. So I don't have over here to show it right now. I'm really sorry. I have it on my other computer, but I'd love to show it. But I'll share it. And anyway, it has like all my trades and my account size, which I don't want to show that stuff. But it's very simple. I have a spreadsheet that have like my portfolio amount, how much money I have, and then it has like for example, I'll type in like the type of a price of a stock, like $10, and then once I type that stock, it will tell me according to my risk level and what my account has, how many shares I can buy of that certain stock. And then I have like different like patterns, like for example, like if the stock is like from 60 from like 80 to I don't know $1,000, it's gonna tell me to buy like for example like I don't know like 150 200 shares. If the stock is from like 50 to 60, it's gonna buy like 400 shares, and so on and so forth. And you know, it depends. But it never the way that I split up is very simple. It's usually if I have, for example, like a $50,000 account, I never put on a stock more than half of that account. So like for example, if when it does the calculations, it actually thinks that I actually have like a $25,000 account. It still shows 50,000 over there, but when it does the calculations, it calculates based like on a $25,000 account. So if you had like a $60,000 account, you have like a $30,000 account, and that's how I see how much money or how many shares I should buy from the certain stock. It keeps me safe. It keeps me like on my mind like set and knowing like for example like okay, if I lose this trade, I'm gonna lose. If it goes wrong, I'm gonna lose like $50. But if I make money on it, I'm gonna make 200, 300, you know, depending on the size, $500 on a trade, you know.
Let me see if I can find my sheet.
I should have thought about that, man. I'm really sorry. For me to be able to get this, I'll have to reboot the computer.
No, it's fine. I got one laying around. I'm just waiting for Mary Beth to send it to me.
Let me see. I have it on my Google Drive. Let me see. I think I do.
Rock and roll.
Let me see. Actually, I do. Yeah, I do. Let me just let me see if I can open this. Okay. Wait, let me see if that download. Say, yeah, beautiful. Let me see. Give me 1 second.
Hey, Rochelle, relax. It's coming. Boy, you were impatient today.
Holy cow.
Rochelle.
Yeah, I got it. Let's put it over here. So let's do this. Where's I got over here. Okay, share. Can you guys see this? This is an old one, but it gives you guys more or less like an idea. So for example, like on a $50,000 account, let's say if I was gonna trade like Woob, Woob over here, if I had bought it like Kunal said, you know, like around
Hey, Oscar, click it back on.
yes,
It just clicked off for a sec. Oh, there it is.
about like $52 of Wooba, you know, it would fall like over here, like what I call like a 1/4 position. So it's between like $50 and $60. So I would my starting position on Wooba would be 160 shares. That's it. And then like on the advanced version that I have of this over here, like in the middle on this C, I actually have like, for example, like my risk. So if this, so I can buy like I can buy 160 shares like at $52. But if it goes down like $1, that's like my stop. So like on the better version, the one that I actually use, it has like all the stops and things like that to make me be like aware of like of knowing like when I have to get out of a trade, you know. And over here you see like this is like from last year. You see like all this stuff like paper. This is like all paper trades. You know, there was like very like minimal. Like if you like see like some of the real ones that I took, I actually messed up some of them, you know. So it makes me like a real person too, you know. I mess up a lot. It happens to me too. So is this what you were looking for now? In terms of,
yeah, it's pretty cool. So you
and again, I'll
this.
share this with you guys if you guys want to know. Anybody who's interested, we can get that stuff, that information later.
How do you pick like, so how do you pick like how many shares like a 1/4 is or 1/2 is? Like, how did you come up with those numbers?
Well, like everybody who started and succeeded in trading, unless you're fantastic, like I also blew up accounts, you know, like it happened to me already, you know, I blew up like one account. So what I never want to see happening again is for me to lose control of the trade and end up blowing up accounts like one after another, you know. So the way that I did it, the way that it worked for me was that if I have $50,000 and I see a stock that it's very low in value, like a $2 stock, I want to be able to participate in it, but not lose control of it. So for example, like if we take like a stock that is like $2.50, first of all, we're gonna buy like based on the support and all the stuff, and always knowing that that stock, if it fails, before it goes right through it, I think like most of the times, before it goes right through it and just like mess you up, it's gonna stop like on some kind of like a moving average or support, and then that's where I usually put my stop.
Nice.
Does it make sense?
Same way I do.
Yeah.
Twinsies.
I don't let it run freely, you know, without like knowing where it's gonna stop. And the thing is calculated in the sense that, like, for example, like if I invest like 1,000 shares on a $2.50 stock, first of all, I really have to be sure that I have to really be like very positive that the thing has a good chance of working. But if it fails, instead of like losing like $200, $300, I might gonna have like a maximum loss of like maybe like $75, something like that. I really try to keep it very tight, because otherwise, if you start losing, if you do like your first trade, and you will say, okay, I'm gonna win like $300, and you lose like 400, just because you didn't know like where to put your stop, that thing is going to impact you, and you're going to carry that shit on for the rest of your day, you know. And that thing is, and if you don't make those $400 on that day, you're not going to be able to make it the next day, because that thing is going to be, you know, that thing is going to carry over. You're going to have that thing on your mind running all the time. Say, oh my God, like I made a mistake. Oh, I made a mistake, you know.
So folks, your risk and position sizing are in correlation with where your stop loss is. So for example, the tighter your stop loss, the more shares you can have. So how do you get a tight stop loss? Well, you can't just arbitrarily choose, I'm going to have a 5 cent or 10 cent stop loss. Your stop loss goes under support at the spot, the inflection point where your pattern becomes invalid. So when you get a good entry where you don't chase, where you anticipate properly and get the stock within the pattern near support, your reward is to be able to have a lot of shares. That's why they say, right, when you see the opportunity, go big. Well, you can do that if you time things correctly and you get stocks near support, because your risk can still be really low. If you buy too high and your stop loss is too far, then you subsequently have to reduce the number of shares you buy by that same factor. So for example, if your maximum risk is $500 on a trade and your stop loss is 10 cents away, then you can have 5,000 shares. But if your stop loss is 50 cents away, then you can only have 1,000 shares. And so you have that direct correlation. So you get rewarded by having a better entry. You can have more shares because your risk will be the same. Now, as you get better, you will slowly overlay another twist to your position sizing, where you move it from a strictly risk-adjusted position sizing to a risk-adjusted with probability position sizing, which is really the next level stuff. And so what that means is, as you've accumulated thousands of trades over the course of your life, and you have data, meaning statistics on how you do on different types of trades, then you can overlay those analytics with your position sizing. So for example, I have in our hedge fund, we have a hedge fund called Click Fund where me and my students trade it. So we have 200 traders in there, and we have our own software where we can put risk limits on our traders. So we have a risk limit for me, like on rubber band setups. Rubber band setups means parabolic shorts. So on parabolic shorts, I have only a 42% win ratio over the last X amount of years. So on that particular setup, because my probability is a little bit lower, I have a max position size of only 4,000 shares. I can't do more than 4,000 shares because I'm not a heavy hitter in that particular setup. I make a lot of money in that setup because my reward to risk ratio is really big on it, but I take a lot of small losses. And so if you're going to take a lot of small losses, you don't want to have like 20,000 shares where you just nip and tuck in 10 cents till you hit the home run. But if it's an earnings breakout and I have an intraday flag, like a day-long consolidation, which is a 2 p.m. breakout, I have like a 74% win ratio on that particular setup. So on that setup, I can trade more shares and have more risk because I know for a fact through data from thousands of trades that I do really well on that. And so it is my imperative as a risk manager and a speculator to bet big when I see the chance to make a 75% hit ratio. And so on those particular trades, not only am I measuring risk, but I'm measuring my probabilities, which will take you to the next level. And that's why you'll see some traders with these all-in type of setups. And for us as retail traders, all-in doesn't mean anything because it's not like any of us are trading with $1 million accounts. You know, you're trading with a $40,000, $50,000 account, then all-in is just it's still a small amount of money. But I will see particular setups where I may use, you know, my max risk on that setup because I have a high probability, and then the risk is really low. And so those are the two things that really matter. And so like Oscar has this spreadsheet, and that's what makes him a good trader. So that spreadsheet was from last year when Maya was born, and he's tracking everything so he can stay in game shape. So he's making some trades and he's doing some paper trades, but he's tracking everything of how he's doing every single trade. Now, that's important because one, he's coming off of that. He's got some hard-earned data on a lot of different stocks that he's traded, and that's how you know your probabilities. And I have the same thing. My best students, they will know exactly how they trade at particular times of day, whether they get sleep or not, when the market is up or down. Do they trade well when the market gaps up versus the market gaps down? And they'll know more about different setups and everything. And that's what allows them to be successful, because they're staying away from their weaknesses and they're accentuating their strengths. And I'm finding, and Oscar's mentioned the same thing, that in trading, it pays to be a specialist, meaning you are the master of your domain of those 1 or 2 or 3 setups, and you know everything there is to know about it. There's nothing there about those setups you don't know, but you don't need to know about a million different things. You know, I just talked to a guy, many of you guys have seen our Path to Profitability with like Wes Bays. So I talked to a relative of Wes, and he's telling me he had some trading troubles. And Oscar, so I said, well, tell me about what you're doing. And he says, well, you know, I'm trading this setup in the futures markets. And he goes, and I trade these kind of things in the options. I'm in the St. Lucci group. And then I listen to Stephen Place, and I do this guy. I said, well, that's pretty cool. And he goes, and then, you know, I'm in Investors Live chat room, and I do a lot of these parabolic shorts. But then I go into this chat room and I do a lot of these earnings plays. And so I said, so he's like, so what do you think you can do to help me? And I'm like, first of all, I don't even know any of the stuff that you do. Like, why are you doing all this? So I go, are you making any money at any of these? And he's like, absolutely not. So
that's the thing. Like they focus so much on this little information from other people. I'll give you guys an idea. I have not watched CNBC for the past, I'll say like 6 years. I cancel cable. I don't have cable in my house. I just have cable for the internet because my girls just watch Netflix. So I don't even have like cable TV in my house. So I have not watched CNBC since 2009. I think when I first joined the Bulls of Wall Street. Best thing I ever did in my life. Why? Because I just rely on what I know and what I can do with that time that I have. So when I walk in the morning, I was explaining to you guys that I sit over here like at 12:45. I don't care if the SPY is up. I don't care if the market is down. I don't care if the oil is. I don't care about nothing like that. The only thing that I care about are my setups and my patterns. And if I see a setup, I see a pattern, and it looks good, I'll take it. It doesn't matter how the SPY is or whatever, if it's a high day or a down day. Because I've seen that a lot with Syed. Syed, like when I met him, like sometimes the market was down, like oh my God, like like nobody could touch anything. And you know what? He had his setups, and he was working. He was just working on bullish stocks. That's all that he knew how to do at the time that I met him, and that's the only thing that he was hitting. Syed, I think if Kunal can confirm that, he can confirm that. I think he started to short like hard. I would say like about like 2 years ago. Before that, it was just
bonds,
just breakouts, and he was hitting. On bad days, he was hitting the breakouts.
Oh yeah. This short thing is something new for both of us. We picked it up a couple years ago. I don't know why we just became so focused on it. I forgot what was happening. I don't know if it was not the flash crash. It was after that when they had the government shutdowns or the sequester. Maybe it was. There was one summer where, you know, the whole summer the market was just nasty. And we're like sitting there going, man, we're like sitting around all day with our, you know, XYZ in our hands, and we could be out there just, you know, crushing this. And we were still making money, but we're like, look at all these stocks tanking. We should be shorting these things. And so we started just playing around with some different strategies. And Investors Lives, Nate Michaud is a dear friend of mine. And so I'd always pepper him with questions. I'd be like, dude, like, what do you do about this? And he'd always be like, wait for the spike, wait for the spike. And so I'd always hit up on my G-Chat. I do to this day, like when I have questions. And I have a good friend of mine, John Welsh Trades. He's like one of my mentors. And so I always hit him up. He only trades fundamentals, but he's got like a very sixth sense of market timing. And so always hit him up. Like, what do you think about this? What do you think about that? And, you know, all of a sudden, it only took like a month or so because I already know how to trade. Investors Live was awesome because he literally just goes, Canal, you know what to do. And I'm like, no, I don't. And he's like, just turn the chart upside down. And I'm like, oh my God, you're right, right? I'm overthinking this so much. Like, oh, the shorts must be playing the news or this or that. And no, you just turn it upside down. And it's like the same type of thing. And that became kind of our new flavor of the month, you know? And so it was our new toy, and then we got really good at it. So all of a sudden, like, that's all we wanted to do, you know, because it was our new toy. And now it's come really in handy. Like, you know, like a year like this where the market's kind of flat, you know, you have to be able to play the long side and the short side because, you know, market's flat most of the year. You're just kind of like up, you know, you go up 3 days and you go down 3 days, you go up 3 days and you go down 3 days. Well, the 3 days you go down, you got to do something. So, you know, shorting is a really, really good. So Saeed, even in his old curmudgeon age, boy, he's a cranky man.
Yes, he is.
Picks up new tricks. He picks up new tricks all the time. But he is, you know, he's a better trader than I am. He's much better than I am.
There's one thing that I want to say about Saeed is that I learned a lot from him. He is that kind of a trader. Like what Kunal just said. He's crabby, man. That guy he's in bad humor like every day. But it's not true. What he is that like you will learn from him because he will stay on top. He will point it to your face, say you messed up, you are wrong, you're doing this, you're doing that. And to be honest, and that's go for any kind of job, any profession. For you to be good, you need to have a guy, you know, telling that stuff like in your face. Like for example, like in the chat room, and whoever participates in the Bulls on Wall Street chat room over here, if one day you put up a trade over there, and me or Syed tells you what is the setup, we're not putting you on the spot. We're really not putting you on the spot. We want to know if you are able to describe your idea and what your expectation for that stock. Because if you cannot do it, I'll tell you something. We're gonna tell you on your face that you're wrong, which is not something bad. It's for you to learn. And if you get it right, you are just one extra pair of eyes for us in the chat room and in the market. Meaning, okay, this guy, we can rely on him. So when he puts something on the chat room, we wanna go check out that stock and make sure that we have like a good setup over here that we can use to make money. That's all that it is. And I learned a lot from Syed from that. You know, I would put like a stock over there and say like, what's the setup? I said, oh my God, like he's putting me on the spot. And then
he calls me stupid all the time.
And in the beginning, I could not explain it. I said, oh, I better shut up. And then things started to happen. You know, I started to learn, and that was it.
He's good. He called me stupid the other day. He goes, you got to calm down. I'm like, what? He's like, go take the day off and go to the beach. And I'm like, I'm sitting there and he goes, these trades are all stupid. And I'm like, what? This is great. And he's like, no, they're not. And he goes, and that's all he asked. He goes, what's your angle here? Is this a long or a short? And I'm like, well, I'm long. And he goes, what's your setup? And I'm like, flat top breakout. He's like, flat top breakout into short. And I'm like, oh man. Yeah. And I sat there thinking, I'm like, who works for who? I'm like, I feel like I work for him sometimes. but he's that good, and he's been one of my mentors. He writes a lot of the, the chapters in our classes and stuff. So Oscar, let me ask you this, because we have a lot of our past students in here, and some of them have had amazing successes, and some of them have had stumbles. And as a new trader, you're always going to have stumbles, guys. I wish that this was one of those things where you take a class and 2 months from now you're making all this money, and it doesn't work like that. I mean, this is like the hardest game in the town. Why? It's the big leagues, but even more than that, trading is so much mental. You don't trade stocks. You trade your hopes and dreams.
Sure.
You trade your past failures, your mommy daddy issues. You trade it all. And that's what's on your mind when you're trading stocks. We all know, I showed you that pattern for WUBA. All you guys know what to do with that stock. Once I give you the parameters of you want to buy this way, that way, you all know what to do. Yet, only 5% of people will ever actually be able to do it, even though it's so simple. Why? Trading is mental. You know, in the end, can you bring it to the table? Can you summon your talent at will when the lights are on? You know, when the lights are on, meaning at 9:30, when the bell goes on, can you get off your simulator and the fake money and all the stuff in your brain and set aside, all the stuff that's going on in your life and deliver and actually do what that pattern says? And it's the simplest thing, and it is hard. It's the hardest game. And I know why, because you're trading your hopes and dreams, not the trades. But the patterns are easy. Yet so many of us fail at trading a simple flag. Nobody can do it. Why? Oscar, what do you do? Like, how do you drown out the noise and be consistently profitable? Like, I'm sure you've had periods. I've talked to you. You've been in slumps before.
Oh my God. Yeah.
I've talked to you. You've called me up and said, man, I'm in a slump. Like, how do you get out of that slump and get your head out of your butt and move forward and progress?
It's what you saw on my spreadsheet. You paper trade. You pretend you're participating. So like that, you train your mind and your eyes to repeat the same process. You focus on when you get out of the boot camp, you have so much information, but that does not mean that you're gonna see that information showing up like on your scanner every day. So that's what I'm saying. Like, if you can't do this, wake up in the morning and instead of like jumping on the market like at 9:30 or in the simulator at 9:30, jump in like at 11 o'clock. Why 11 o'clock? Because you're gonna see patterns much better formed. And when you see those patterns, instead of like putting your money, just paper trade. Say, listen, I would buy like, I don't know, Caterpillar at 85, or something like that. Don't just jump in there and try to imitate Kunal. You cannot replicate what he does. You cannot replicate what Syed does. It's impossible.
Everybody's their own man.
Everybody that's why we are like individuals. Everybody have their own fears. The way that everybody thinks is different. Everybody's in their household. Like I'm gonna have like four little girls here that I have to take care of. So whenever I sit over here, I have to focus on the stuff that I really know. So this is it. If you're not ready to commit to put your money, paper trade until you feel comfortable enough that when you pull like a trade, even if for you to take like a gain of like 75 cents of $1, at least you said, oh my God, all those paper trades that I did, they finally turn out into something profitable, even if it's just to buy like a can of soda. But that's how you start.
Let me ask you this. Now, this is the tricky one. This is going to test your know-how, because there is no easy answer to this. So say you go back to paper trading. Everybody goes back to paper trading. I have some students, they murder it on paper trading. I mean, I've got one guy that I've been working with. He knows my setups better than I do. He kills it on simulating. I mean, he knows it better than I do. Everything. But when the lights go on, things trade. So when he goes live, things tend to fall apart a little bit. What happens if you go back to paper trading, you kill it, then you go back to live and it's just, you're not replicating. Why do you think that is? I mean, some people have this issue. They just can't replicate what they're doing.
Wow.
Boom, boom, boom. I just asked you the $100 million question. If you know this answer, you better open up your own website. Because I don't know it. I mean, I have ideas, you know. I mean, I've asked Dr. Miniker, I've asked a million. We've had trading psychologists, everybody on staff, all these people. But it's a very tricky answer because
it's because like when you're paper trading, you're trading what you've learned. When the light comes out and you're live, you're trading your life. You're putting everything you always dreamed of, everybody who's behind you on the line, and you have to make it happen. So you always want to see things working the same way as you had on the thing. I think I would answer like that, you know, like when the difference when the lights come on is you're trading your life, your soul, and everybody who's around you. You know, you put everybody's life on the line.
So how do you get past it? How do you make the connection?
You start the way that I do it.
Yes, because I noticed for you.
When you go live, when I start when I went from a paper trading for a whole year to going back live, what I did is I started to focus on the setups and taking fast gains. So on a setup like WUBA, you know, then you take like a $52, you're anticipating. As soon as it gets to the $54, which is which is the breakout, you take like half of your money at the breakout.
Yeah.
You take those little fast. You saw me trading the WETF. It was like 30 cents up, then like 15 cents down, another 20 cents up, and so on and so forth. That's how you do it. You take small gains, because those small gains will bump up your account to something bigger. And when it starts to get bigger, you're going to be able to trade with bigger sizes. When you trade with bigger sizes, you're going to start making more money. And it's just like a snowball that starts to happen. And remember this, the money will come as a consequence of your success. That's what it is.
That's right. You know, I learned something from one of my mentors once. He says, you know, the public persona that people see of you, he goes, but nobody has saw the years of torture you went before that. You know, so like, and I was having a phone call with him. He goes, you know, always remember that, Canelo. He goes, the fun person that they see now wasn't that fun 5 years before. He was a misery because he was always working, you know, and you earn that in private, what you get to display in public years later. And it's very, very hard. So for those of you guys that, you know, are having trouble making these, you know, connections, you know, one of the things is the paper trading is for a simple reason: to know that you have mastery over a particular strategy, a particular setup. It'll give you the confidence that you know everything there is to know about that setup. But there is, of course, no emotion into it. Well, that's what makes trading awesome. So the only thing, if you can make money paper trading, theoretically you can make money trading live. The only thing holding you back is your emotion. And that's why this is the best game in town, because it's not about whether you're black, white, Indian, metrosexual, heterosexual, bisexual, Asian, Indian, Brazilian, whatever. It is about whether when the lights go on, can you put your balls on the kitchen table and make a run at it without getting them chopped off? And that's huge. But it's all on you. It's all on you. It's dependent on you. When I lose, for those of you guys that see me in my chat room every day, when I lose, what do we notice? Almost any time I ever lose, it has very little to do with the stock. It is always because I screwed up. I made an emotional decision.
Yeah.
I screwed up. And that's what I love about the stock market, because I can live with that. I can live with the consequences of knowing I screwed up. In the end, I know the strategy. It's just about whether I can deliver and summon my talent when the lights go on. And it's on me. And so that's huge. So for those of you guys that are struggling, when you're live, but you do great when you're simulating, know this. You know everything there is to know about making money in stocks on a strategical basis. Now it is about healing yourself, conquering your own fears, and coming to grips with your expectations and what you have going on in your life, because that is what's going to get you to that next level. I can't go in there. I can give you tips. I can tell you to write down your trades before you take them. I can tell you to breathe deeply before you take a trade. I can tell you all this stuff. But in the end, right, you've got to go out and fix some of these things yourself and make a run at it, because you do know how to trade. And one of the things, I'll give you an advice of something. I noticed that this has worked for Oscar. And for those of you guys that known Oscar a long time, you see a very svelte, new, lean Brazilian frame. He's looking like a Brazilian soccer player down there. Oscar is very, very disciplined in his routines, his exercise, diet, nutrition. He eats very well. He cooks his own food. He doesn't eat junk. Like, you never see him eating like freaking hot dogs, and just like, he eats good. And it doesn't mean he's like just eating freaking vegetables all day and chicken breasts. He makes good, wholesome, non-processed food for him and his family that's delicious. But he has a
every day
very disciplined life, and that carries over into your trading also. He's structured with his time, the way he treats his kids, the way he eats, the way he exercises, and those things will carry over into his trading. He's very regimented when he's doing that. So Oscar, give me an idea, because you've lost all this weight. You've got this, you're a good eater. Give us an idea how you take care of yourself.
Well, I work out pretty much. Well, when you have kids, you work out like 24 hours a day. But to give you guys a rundown, my week is once the market closes, I go pick up my kids, come back home. Now that it's summer, I usually get my bike and I ride around about like 12, 15 miles back home. Then I go to Monday, Wednesdays, and Fridays. I go to my Brazilian Jiu-Jitsu class, and then on Tuesdays, Thursdays, and Saturdays, I work out. I just go to the gym and I work out. And in the middle of all that, like as soon as I come back home, my wife is still not here, so I still have like about like a 45 minutes until she gets home, and I cook. I cook the meal for the kids. I do a lot of what Kunal said. I don't buy processed food. I don't buy like any canned stuff. I go to the supermarket like in the morning after I drop my girls. I buy the fresh vegetables, everything as fresh as I can, and I come and I cook. And when everything is fresher, it's easier for the kids to eat, because it has a better taste. So it's pretty much like that. And I love barbecues too, So now the summer is like I do barbecue like almost every Sunday, But everything moderately.
Folks, you're gonna find this out about yourselves. Disciplined people become disciplined traders. If you are a habitually late person, it shows up in your trading. If you are a sloppy person, it shows up in your trading. One of the things you'll notice about me is I'm very, very haphazard in my trading at times. I get a little wild with my size, my ego, a lot of different things. And why is that? Well, because I'm a haphazard person in my personal life. I'm a wild boy. You know, I'm a wild boy. I have a very messy room, and it shows up. I have to work very hard when I'm trading to stay organized and to have proper watch lists and stuff like that, because I'm not an organized person in my real life or in any of my careers. I've had to be, as we have 18 employees and like 5 different business ventures. Like we have so much stuff going on. I've had to become organized, but it is like a daily struggle. And so that shows up in my trading. You know, I can be all over the place without structure to my trading if I am not properly prepared. You'll see all that. If you are an anxious person, you will be an anxious trader. You will buy and sell everything in an anxious manner. And so sometimes you have to get to the root of that problem to solve it in your trading. You know, that becomes huge. And for those of you guys, and I think this is just maybe the #1 killer of some of these guys, is if you have money problems and you think that the trading is going to come in and solve it,
nope,
never going to happen. Never. Trading can make your dreams come true. I've seen it, I've lived it, but for those of you guys that haven't earned it, the decade of pain that goes before it, it's not going to come in a short fix and fix your money problems. It doesn't work like that. And the reason is not because you can't learn it quickly. It's because of this one simple thing, that as retail traders, our #1 advantage against everybody, hedge fund managers, machines, HFTs, algos, everybody, is that we have the ability and the need to be opportunistic, meaning we only need one good trade in a week, even sometimes, to make some real money that impacts our lives. We are laying in the weeds, in the darkness, like freaking Rambo, waiting to stab our prey. But that means you have to be opportunistic. The minute you need the market to do something because you have to pay a bill, the minute you need a stock to do something because you have to pay a bill, you lose that huge, intense advantage that we have, which is the ability to be opportunistic, because now you're forcing yourself onto the market. And when you need the market to do something, it never will. It never will. And so now that's when you get that in that dirty spin cycle of the over trading, the forcing the trades, because you need to find something and it's not there. And that's when things really unravel. I think one of the reasons I was able to gain some mastery over trading, besides having a really good mentor, was, you know, I had a good job and I made sure that I was making some money while I had a job. You know, Oscar mentioned, like, you know, some of his first accounts, like, you know, he had $5,000 in his first account. So the next one, he had $35,000. You know, a lot of people come in with like $1,000 and they say, okay, I'm going to do this for a living. And it's like, no, you can take that $1,000 and sure, you can learn from it. You can gain skills from it, from using it, but it's not necessarily, that's not going to be the account that makes you $1 million. You know, it doesn't work like that.
Well, what you can get with that is what has been helping is get good education. Yeah. Go to a place where you can get educated. And what Kunal said is about organizing himself. It's very true, because like when I first came in Kunal's chat room in 2009, I was watching him doing his stuff that in my view was like sloppy, but it was working for him. But I had seen him like at those times, like getting hammered too on trades. But he always came back like the next day, say, okay, I'm going to work hard. I'm going to work hard. I'm going to work harder. And I can even see that. I can tell him like in front of him, like from 2009 when I met him to 2009, 2010, doesn't really matter. From now 2015, he's a completely different guy. The only thing that stays the same is the horrible singing, but everything else, seriously, super organized. Like when I went to his house, he has like his computers all set up. You know, he has his routine, like where he wakes up, like sometimes, I don't know, sometimes 5:30 in the morning, 6 in the morning, he goes work out with his personal trainer. He comes in, he does his scans in the morning. So that's very important. And the only way that you're gonna start doing that stuff is when you take your head out of you know exactly where, and you say, okay, I'm gonna do this for real, and I'm gonna do this right. For me, the do it right, the one that unleashed my trading was really, and it sounds like ridiculous, but it was taking the boot camp, because there was a lot of stuff that I knew, but there were so many small gaps that I had that I was able to fill. So it's like every profession. If you want to get good at it, you got to get educated, period.
So, and guys, we're going to answer your questions in a hot second. So let me just give you a little bit of juice about our boot camp. You know, our boot camp is a 60-day long program. Everybody that takes our boot camp has access to it for life. I think that's really, really important, because when life gets in the way, you guys are going to have kids and jobs and things like that. And this is not a linear thing that you're going to learn in 5 days. And so you have this thing for life. I have students come in into class that may have taken my boot camp 3 years ago, and they'll come in just to get some touch-ups, ask some questions, you know, hang out with the students. But our boot camp is an all-intensive thing. So how I believe that traders need to be built is something I learned from playing basketball my whole life and watching sports, is that, you know, building a trader is no different than, you know, building an Olympic athlete, in that you need a very intensive 360-degree course. You know, you have the building of your technical skills. That's our coursework. You know, we have 1 month of coursework. But beyond that, you have to take it from there. Okay, you have this technical skill. Well, now you have to build upon it. So we give our students homework and quizzes every week. But then once you have the skill, you've got to go out to really gain expertise in something and build confidence. You have to have repetitions. You know, people that are professionals have tens of thousands of repetitions of whatever it is that they do, and that helps them gain their mastery. And so once our class is over, my students actually watch me trade live. You know, we give them access to my chat room where I'm on video, and then now we have a screen share called Bull's Vision, and they literally see they watch me trade live. So they see every day whether I made money, I lost money, and what it is. And then at the end of the market close, we have a recap of my trades, what I did good, what I did bad, and we reverse engineer the trades so that we know exactly what was happening on these, like what the setups were. Now from there, you know, and my students have access to that for months, so they can do that on their own time. During that time, they're going to hop on simulators themselves. They're going to hop on simulators themselves, and they're going to practice trade. You know, the practice trade is not the end all, but it's going to show you whether you have the technical skills down that you learned in the course. And you're going to just hammer out repetitions. But the beauty of this and why it's important is that when you're doing this, you're building up your repetitions, and that you need thousands of these things, but you're also starting to hone your own style and your own personality into your trading. And that's huge, because every great trader has a unique perspective on the market. Oscar, if you saw his charts, they don't look exactly like mine. Even though we're trained in some of the same techniques and tactics, he has his own take on things. He's got things on his charts I've never seen before. He's got these R things and this tricks thing and this Japanese money flow thing. I don't know what any of those are, but it works for Oscar because we're still using the same overall techniques of the patterns and price action and the psychology of things, and then we add in our own tricks. And that's what you'll find on the simulators. You'll start to build your own groove. And once you've attached certain metrics to that, then, you know, as always the caveat is that, you know, we have a hedge fund where our students can come in and trade, where we will help give them great tools, professional hedge fund tools, the tools that I trade with that were developed for me personally by my good friend Chaim Bodek, who's like one of the preeminent gurus for high frequency trading and algos and things like that. You know, he developed the software for me. I've passed it along to my students. My students have the ability to come in and trade in there, and they have the ability to get capital, tools, mentorship, and things where they can trade. And then, you know, obviously the cheapest rates in town where, you know, they're only paying 27 cents for every 100 shares they trade. So you don't have to pay like 10 bucks a trade. You know, you trade 50 shares of something, you get knocked 13 cents or 27 cents for 100 shares, or, you know, $1.30 for 500 shares. It's pretty cool. And we build that for our students, and we come in and have a really good support system for all of this stuff. And so you have that 360-degree program that you need. You need the tools. You need the education. You need the feedback of mentorship, of going on the simulator, sharing your trades from the simulator to the community. You need all of that stuff. It's awesome. And that's what you need. For those of you guys that, you know, come in and think you can watch a couple videos on somebody's website and you're going to learn how to be a trader, I don't know. It can happen, but that person's going to be, there's a 1% chance of that. And you're going to need more. Now, it doesn't mean that everybody that takes any of our classes is going to be a trader. It don't work like that, because just like in any job, you know, you have 100 people on any given job. I mean, right, there's 10 go-getters. There's 10 go-getters, and there's 20 people that are competent, and there's 20 people that are just never show up, and so on and so forth, right? There's people. Just like how people are in their personal lives, people are going to be like that in your trading classes and stuff like that too. So, you know, you'll always have what you put into it, you know, what you put into it, what you can take out of it. My best students are the most annoying ones. You know, one of the reasons I love working with Oscar and stuff like that, like, even when he's a student, I know him. Like, I FaceTime with his kids. Like, you know, my best students are the most annoying ones, the ones I have personal relationships in. You know, you get what you put into it, and that becomes really, really huge. So, you know, email me, guys, if you have any questions on this. You know, I'm putting my email address in here, and you know, you can hit me up anytime. Oscar, people, there's a few questions for you if you don't mind answering. I know it's getting late for you, but dun 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 dun. Hey, Rob Warren, send me an email and I'll help you out with that. Dun, 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 dun. So, Oscar, people are asking.
There's one thing that I wanted to add is that you have to. I got it. It just went out of my mind right now. You know what? Let me see if let's read the questions, and then if I remember, I'll say it again.
Cool. Oscar, any particular brokers you like using, and also when you were paper trading, what do you like to use?
Paper trading, I just like to use what you guys saw, which is my my spreadsheet. Just keep it simple. You know, it's for my information, for my own analysis. So I personally like to keep it simple like that. You know, I know that with the boot camp, you can open an account with what is it called, the pro something. I forgot the name.
Prodigio.
But yeah, but and who I trade with, I traded with Dito Trade.
Oh yeah, my man Brian Lund,
Brian Lund, yeah.
a good friend of mine.
My good friend too, yeah.
He's a great guy. One of the best bloggers I've ever seen.
Oh, yeah, he lays it out like it's supposed to. All right, what are your questions here?
Dun, 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 dun.
I'm from Philly. Yes, I live in Philadelphia in the suburbs.
Oscar, so Jay wants to know, me and the Indians always got the longest questions. Jay Shah, my cousin wants to know, can you please explain your progress from losing to consistently winning in chronological time order?
Oh,
so like, what are the points that kind of get you over the hump? Because at some point, you know, there's like, and I feel like there's 5 kind of phases to the trading of where like you start off, you're losing, then you're only losing a little, and then you're just breaking even, and then you're making a little, and then you're making a lot. And the hardest part is going from starting to just making $1. I find that's always kind of the hardest part. Going from $1 to $1,000, I actually think if you can just finish in the green every day, to go from that to making 1,000, I think is the easiest part. But going from losing to making $1, I think is the hardest part.
Yeah, for me it's like the thing is like since I didn't have like a lot of discipline, I just okay, it's nice. I have a big account, and I can take the heat. I have deep pockets. Bullshit, you don't. That's the thing. So when you start like losing, and you don't have discipline, you're not gonna lose like what I said. Like what I'll lose today, like on a day, like I'll lose like if I have to have like a bad day, I will lose like $75. You know, that's not gonna impact my account. I can come back the next day, you know, and make it back. But when you don't have like discipline, like you lose like $200 when you have like a $50,000 account. Say, okay, it's nothing, you know. And then the next day you lose another 300, and then the next day you win like 100, and then the next day you lose 500. And say, oh my God, no, there's something really wrong. So you have to put yourself to a point where, okay, I lost a significant amount that if I continue, I'm gonna lose my my day trading status on the brokerage account, and they're gonna lock you in like for everything. You're just gonna be able to be like very minimum. So that was the biggest thing. So before I got to that point, I said, okay, I have to stop. That's when I decided, okay, I'm gonna get more education. That's where I'm gonna start jumping on the chat rooms, because before, like from 2007 to 2009, I was just doing by myself.
Yeah,
that was like the worst phase. You know, there was no like, what was the first chat room that you Syed, Stu, you guys were all in there? What was it called?
we all used to be in a chat room called Wall Street way back in the day. Wall Street.
I did not even know that stuff, man. I
was basically in college. You know, those guys are much older than that.
Yeah, but that's what I did. Like as soon as I saw that the things were gonna, you know, hit the shit was gonna hit the fan, I stopped. I started looking for education. That's when I started like going into the chat rooms and seeing what other people were doing. And that was something that I never had, was being able to talk to other people about trades. And that's what you do, like in the chat room. You start talking to people about the trades and what they think about this or that. That's when you're gonna meet like somebody like Syed, who's gonna, you know, challenge you, say, what's the setup, and then you're gonna have to explain. And you go from that to paper trading. From paper trading to gaining confidence, because you start like hitting those trades like one after another. And then the process is the next level is you start taking trades and taking the money off exactly as you would do it in the paper trade account. And then as soon as the little money starts adding up on your account, that's when you start to increase your risk and increase like your sizing. And that's when you start, then you go like from like make like $1 a day to maybe the next month you make like $50 a day. Then the next month you make like 150, and then 500, and so on and so forth. Does that make sense? Does that answer his question?
Yeah. Do you ever take any swing trades? I take swing trades all the time.
I don't anymore.
I learned
that. I don't have, because what I have to, because my scanner is set up for me to do trades that are right there, right now, in the 2 hours and a half that I have. I cannot. Maybe I'll be able to swing trade when my newborn, who's coming next month, will be like 5 years old. You know, so maybe like in 5 years from now, I'll be able to take swing trades. Until now, I have to work.
You got the long-term time frame.
But I have to plan that stuff. Otherwise, no, I never. It's very hard that I take swing trades.
I do more of my. I mean, I have a couple of very small accounts. I do some swing trades in for fun, and then I like to take like small accounts and just build them up. I mean, it's just like a hobby. But then I have, you know, some different IRAs and stuff where I do a majority of my swing trading that are much bigger accounts, and so I actively swing trade in those. You know, using just simple techniques. You know, breakout pullbacks, range trades, overbought, oversold, rubber band trades.
I'll tell you something. Last year, when I did not have time to trade so much, and I think it was by end of September, that's when I talked to you and I said, Kunal, what do I do? And then you said, why don't you come in the chat room like you do every day, continue your paper trading so like that you can focus on the trades, but if you're gonna do something, do it with Paul.
Yeah, Paul's awesome.
Because Paul is a swinger trader, and he specialized in this. And I took a couple of his trades, but I work on them like as day trade. So like when he bought it like something, I would go on my chart, say, okay, I can buy this a little bit lower, and I see what he's seeing, and then I would sell it on its way up. So yes, I kind of swing traded by using Paul, who actually have the swing trading service on the Bulls on Wall Street. But I paper traded. But I day traded. Does it make sense what I said?
Yeah.
Okay.
Hey, Gary. Gary's question, and this is just a no. But should a potential trader work and save up money to trade with, or take out a loan to have access to more money? Never, ever. I mean, debt in general. I mean, it is.
Debt in debt is not good.
In anything is really never good. I mean, there are certain cases in business where the application of debt can increase the potential multiples of your ROI due to the access of capital, because you may find a once in a lifetime, opportunity or something of that nature where you can leverage the debt. But in trading, that is a no, because you have no guarantee that you're going to win anyways. We don't even know if you have what it takes. Everybody that comes into trading thinks they have what it takes, right? Otherwise, they wouldn't get into trading. But the failure rate is high.
Can I tell you what I tell people, Kunal? Excuse me for interrupting. But like when I have somebody says, "Hey, listen, I have $5,000 or I have $2,000. You know what I tell them? Say, listen, if you have like $5,000, go and take Kunal's bootcamp, and then he will hook you up with the click fund that will be able to make you work with the $2,500, and on that process you'll be able to build your account." That's what I tell them.
Always. Yeah, guys, and remember this, there are no shortcuts. You have your whole life to trade. Even if you're 40 years old, you could be trading for the next 40 years. In a few years, they're probably going to bionic humans running around. I mean, you can be doing this for a long time. So always take the long view of things. You don't have to be jumping in. You got a long time to get into all this. How many trades do you take on average in a day when you trade?
2 to 3, because that's the time that I have. So I usually look for two to three trades, and they have to work in the next 2.5 hours.
Sometimes I see you take more.
Let me tell you something. I take more on Tuesdays and Fridays. That's when all my girls are in school. Tuesdays and Fridays, I have the whole day. I come back over here and I start from 9:30, 9:45 until 3:15.
What's the best way that you manage your time? For somebody that has time constraints. I mean, you got a lot of stuff going on.
How I manage my time?
Yeah, buddy.
Oh my God! I just
And
try
do
to.
you, I mean, do you ever even have time to yourself? I mean, I'm guessing you can't even go to the bathroom without girls knocking on the door, daddy, daddy, putting their fingers under the
The biggest
doors.
surprise is when you're pushing and then that door just opens, and then poof, it's just good. The way that I manage my time is by being very disciplined. I really uh, stay on top of my stuff, especially like on my health. I focus a lot on that because I know that if I'm healthy, I can overachieve like any obstacle and I can do whatever I want and whatever life and my day throws at me. So just before you think about trading, before you think about the like everybody else, focus on yourself first, because once you understand yourself and your limitations, that's when you can focus on giving other people a little bit of yourself and becoming like a better person and eventually like a better trader. I hope that answers the question.
Nice. I think just a couple more. Bob, we'll get that taken care of. Make sure you hit up Kevin. We'll make sure we do that. Dun 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 dun. How important is your mental, man? Kyle, good stuff. Kyle, how important is your mental health to trading? I'm guessing that's the whole thing, Kyle. You got to have it. But on the other side of things, the craziest people are often the best traders. Maybe because they don't feel anything. They're just crazy. Who
Yeah,
knows?
it gets to a point like, well, once you train it, once you educate yourself well, once you train, things just come like automatic, like it took me like about like I'll say like almost like 9 months to be able to scan like I saw Kunal scanning, so it takes a while for you to get to that point where you see stuff like, and sometimes like I even talk to my wife, I say, what, like I got hit again today. I said, don't worry, just go back there tomorrow, do your scans, you know what you're doing, so it's also nice to have another person behind you, like supporting what you're doing, because it's tough, sometimes. So if you have like a loved one that is there, that believes in you, that's something that is very tough. Somebody who believes in you.
Oh
Everybody
yeah,
believes in you.
you
Oh,
got
you're
you
crazy,
got a good
man.
one.
Oh, you're gonna throw your money out the window. Nobody believes. Like one day I sat with a friend and I said, hey, listen, this is how I trade. This is how I see the setups. So no, you're bullshit. It's impossible. You cannot work like this. Well, the risk is, it's right over here. It's the chart is gonna do this. It's gonna go down. It's gonna hold the support. It's gonna start coming up. You buy it close to the support, so you have like some risk, and then the thing just goes. How do you know it's gonna go? It's on the chart. The probability is on the chart. When you learn how to read the charts so well, the possibilities are numerous. Simple as that.
It's the pull and pray, guys. People ask me all the time, like, how do you know it's going to go up? And you're like, well, in life, you don't really know anything, right? Sometimes you just do the pull and pray, baby, just like in your college days. Now, guys, we have probabilities, and more importantly, we manage risk. Whether the trade works out or not doesn't matter. It don't fucking matter, because if it doesn't matter, we are going to lose an amount that we're not going to lose any sleep over. Okay? So if I lose, it's an insignificant number where it's not going to ruin my life. So if it doesn't work out, who cares? But we do know that the patterns we use and the methodology that we've incorporated into what we do every day has high probability setups. The rest is just letting the numbers work out. So if I lose 4 times in a row, people are like, hey, are you going to stop for a day? I'm like, why would I stop if I lost 4 times in a row? I haven't hit my max pain for the day, which for me is $2,500, but I'm not going to stop, because if I lost 4 times in a row, it probably means I'm about to rip the next 6 as winners. you know, because that's what the numbers tell me. I have to let the numbers play out. So as long as I'm feeling well, then I'm going to be doing well. So I believe that is it. Well, Oscar, my man, thank you. I've been meaning to get you on forever. It's about time.
I think this was
thank you.
I think it was the perfect time right now.
Thank you. And guys, Oscar's in our chat room every day, talking with people. He's got his Tuesdays and Thursdays where he does some over trading. No, I'm just kidding. He's in there a little bit more. And so you'll see him. I'm in there every day. Also, you see me on video like this. And yes, Oscar's right. I am singing pretty much all the day. And it really depends. Some days I like to listen to country music. And some days I like to listen to rap music. Some days I listen to Cher, Tina Turner, Debbie Gibson. We like to mix them all up.
Share.
Yep, and I'm also on screen share. So I have my trading platform, my charts, everything up on a program called Bulls Vision. And so I have a screen share up all day too. And so that ends up being, you know, really important. One thing, Clayton's a longtime student of mine, so I want to just make sure we answer this question of his. He's a nice man, and I met him in California. He's like a real sweetheart. Clayton wants to know, Oscar, how have you developed your emotional and psychological management to be able to minimize the hijacking, overtrading, refusing to take stops? And Clayton, by the way, is like he's one of the people that's too smart for his own good. He's like a certified genius, and so obviously in trading you have like a baseline of intelligence you need, and then actually like the more and more you get, things get a little bit dicier. You're so smart, you have to come back and even things out sometimes and not overthink. Clayton is an overthinker. And so how do you get past the hijacking, overtrading, and refusing to take stops? Besides actually pounding in your brain that if you do it, you will go bankrupt. Which, Clayton, that's what you should do. You should make a freaking poster on your damn monitor saying, if I refuse to take stops, I will go bankrupt and ruin my life. And put it on both sides of your computer. And then, if you actually still refuse to take stop losses, you know that it has nothing to do with trading anymore. That you have possibly a secret self inside yourself, vendetta against yourself, where you want to lose. And I swear to God, I have met dozens of people that actually are afraid of success. They want to feel the pain. You put it in front of your computer that I will ruin my life if I do this, and see if you keep doing it. Because that's going to say a lot about what is going on internally with you, right? If you know for a fact, if you do something, you will die, then should you do it, right? That's like the same thing when people smoke and stuff like that. Maybe there's an addiction thing going on or something else going on. You need a psychologist.
Yeah, I think you pretty much resumed everything. You know, it's like I said. Like I have my wife, I have my 4 kids, and then I have to make the decision. If I am wrong on a setup where everything looked right, why would I be wrong to put the stop in this place and just save myself all the trouble and save myself all the emotional, psychological, stress that I'm gonna have to be able to get back? So that's the difference of like losing like $70, $75, and losing $700 because you're stubborn, but you're stubborn because you're stupid inside. You know, that's what it is. You just forget about it and you say, okay, my maximum loss, it's $75. It's all that I can take as a loss on that trade, or $50 or whatever. And you just assume, okay, I made a mistake. That does not mean that you cannot retry it. How many times have we seen like Kunal today on VLTC? He went in at like around like 7:30, And then like five cents after, I say, I'm gonna get out at whatever 7:25. It's wrong. What happened to him after? Went in back again like around like 7:38, and like I went to the bathroom, came back, and he was selling like at 7:77, 7:67. Why? Because he was wrong the first time, but that does not mean that he is wrong the second time.
I'm okay being wrong. I'm wrong all the time.
If he's wrong the second time, that's it. The setup was really wrong, and he misread the chart, and it happens to everybody every day.
Nothing you can do about it. I'm a 34-year-old man wearing snapback hats. I mean, you know, everything I'm doing is wrong. But guys, just admit it. There's nothing wrong with being wrong. A lot of smart people, especially people with engineering backgrounds, medical backgrounds, they come from a background where there are linear answers. If I see this, this must happen, okay? In trading, it's more of an art plus science, meaning if you see A, B might happen, C might happen, D might happen, and it's about probabilities and measuring those probabilities. And if one of the probabilities comes in wrong, guess what? You have to switch gears. But that's it. You know, there's not that much more into it. And so you've got to train yourself to come in and say, it's okay to be wrong. I can admit it, whatever it might be. But a lot of people have trouble with that. There's something going on where they just don't like to, you know, come to that conclusion. And it's hard.
Yeah, I think that the smarter they write, like you gave it the example, like of engineers and doctors, like those people, they have to make sure that everything always works because there's a lot of responsibility behind them. But in trading, it's very hard for you to keep that sequence, the sequence of winning and make sure that everything's right all the time. Sometimes you will mess up. It's like doctors. Sometimes everything looks fine on the patient, and then suddenly the son of a gun dies. You know, engineering, they bring a building up, and then suddenly there was something that was misread on the floor where the building was built, and part of it collapsed. It's the same thing in trading. You cannot always win, and losing makes you stronger, makes you feel more courageous, and going back there and say, okay, I saw what I did wrong, and this is how I'm going to fix it, and I'm going to do it better tomorrow. That's what it is. So there's never a right, wrong answer.
Rock and roll. Well, Oscar, a pleasure as always. Folks, we will see you tomorrow in the chat room or on Twitter. Guys, this will be uploaded to YouTube, you know, by tomorrow, so it'll all be on there. Oscar, I owe you one. I appreciate it. A lot of people have just messaged saying this was the best one we've had yet. So, and great job. This is the first of many for you.
For sure, for sure. And I would love to do it again. I want to thank everybody again. I want to thank the Bulls at Wall Street for giving me the opportunity to come out and talk about my trading experience and my life. And let's do it again. And tomorrow, let's get together and do this like a boss.
All right. Take care, guys.
All right. Cheers.